So while the S&P dithers, the Dow delivers. And it's a tale of two indexes today, or yesterday to be specific. The S&P stalls while the Dow basically did what we expected the S&P to do. Thankfully, the income trades this week continue to shine despite the S&P dithering. Anyway, let's go and look at the charts and see what could be up next. So it's a bit of a trader's paradox today, where we can be right on the analysis but just wrong on the index. And again, I think this is where a lot of traders can be frustrated. Again, being right and wrong at the same time. These are not unique situations. Again, we were looking for that bearish move, looking for a move down to about 60.50 on the S&P, and again what we saw was post news we saw the market pretty much go in the opposite direction, and that's fine and dandy. Again, we're not going to get everything 100% right, although just looking over at the Dow, one of the things that we were looking at on the post-news movement was that continuation of the bearish movements. Again, we've got a lovely trading range, clear breakouts. Again, if we take the height of that range, deduct it from the breakout point, we get that target. So we're not a million miles away from that right now. We'll probably see that being dinged near the market open. And the overnight futures, we're already seeing a little bit of a push down, so I would imagine that official target on the cash will be reached. Back on the S&P, again, we did remain stuck in a little bit of a wider range. We started to see price just meander sideways at the end of last week, just ahead of that trend line break. We are seeing the Bollinger Bands just pinch again and flatline, so we could be developing this wider consolidation in minds. Again, what I'd like to see, because we've got this wide egg, it's not officially at the moment, but I think it's fair to say that we've got price developing some clear boundary levels. I'd still like to see price come down to that 60.50 level. I want to be buyer at range lows or near range lows. So coming down to 60.50, 60.40, that would be an ideal scenario for me. That's just whether we get there or not. Should we blast through the highs, I can just go straight back to being bullish, and should we blast through the lows, I can certainly reevaluate the bearish landscape. ADD's not giving me any clues for the moment. We're still in that middling ground, that plus minus 1,000 level on ADD. We are again, yesterday we went to plus thousands and back down to the zero line, which was one of the things that motivated the bearish set up, the bearish sentiment for the day. It just never transpired, at least not yet anyway. So despite the mismatch, the income trades again this week, they continue to hit their mark. This week's bearish trades are yielding steady profits, and again, just one of the benefits of an income style system. We don't necessarily need to be, well, firstly, either right on direction or get the direction that we want every time or any time. We can still profit from the markets. So short term, I've still got a very slight bearish bias for the moment until the bullish pulse bars develop at that potential range low that is developing. Again, long term, I remain bullish up until the end of the year and into the next year. And to be fair, we're halfway through December almost. So again, being bullish up to the end of the year is it's not a great stretch, to be fair. We're coming into that Santa rally phenomenon. So I would imagine we're going to be flipping to bullish very, very quickly. If you'd like to know one of my specific entries, exits, stops and target systems that I apply with my income system on SPX, then you can click the link next to this video and you'll be taken to a free training where I outline the step-by-step process for one of my favorite money-making patterns. So if you click the link, I will see you over there.